This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The global oil deficit is now seen at about 1 million barrel per day, BPD. Russia's Deputy Prime Minister Alexander Novak said on Wednesday, days before the OPEC Plus top negotiators are expected to meet. The Organization of the Petroleum Exporting Countries and its allies, including Russia, a group known as OPEC Plus, is bringing back 2.1 million barrels of oil per day of oil production through July, easing cuts to 5.8 million barrels of oil per day. Their next meeting is set for June 1st. Any increase of oil production by Iran, if indirect talks between Washington and Tehran lead to a lifting of sanctions, can potentially add between 1 million to 2 million barrels of oil per day on top of the gradual rise OPEC Plus supply, analysts estimate.
U.S. crude stocks, gasoline and distillate inventories fell last week, the Energy Information Administration said on Wednesday. Crude inventories fell by 1.7 million barrels in the week to May 21 to 484.3 million barrels, compared with analysts' expectations in a Reuters poll for a 1 million barrel drop. Inventories were in line with expectations, but the good news for the oil market is the robust demand of gasoline and diesel fuel going into the Memorial Day holiday weekend, said Andrew Lipow, president of Lipow Oil Associates in Houston.
Moving on to the top news in the energy sector.
China's banking regulator has asked lenders to stop selling investment products linked to commodities futures to mom-and-pop buyers, 3 people with knowledge of the matter told Reuters, to curb investment losses amid volatile commodity prices. It has also asked lenders to completely unwind their existing books for these products, which they manufacture and sell to individual investors, said the sources, who are involved in and have been briefed on the decision. The China Banking and Insurance Regulatory Commission's, CBIRC's, order to exit these products has not been reported before. It issued the order this year, 2 of the sources said.
Oil prices steadied on Wednesday as a drop in U.S. crude stockpiles reinforced expectations of improving demand ahead of the peak summer driving season, offsetting worries that a possible return of Iranian supply would cause a glut. Brent rose 16 cents, or 0.2%, to $68.81 a barrel by 11:20 a.m. Eastern Daylight Saving Time, 15:20 GMT, and U.S. West Texas Intermediate, WTI, crude was up 11 cents, or 0.2%, at $66.18 a barrel. Both benchmarks paired earlier losses after government data showed U.S. crude stocks at the Cushing, Oklahoma, storage hub fell last week to the lowest since March 2020. Refiners also ramped up utilization rates to pre-pandemic levels.
Next, we have the top news in metal markets.
Refined copper output in top consumer China could increase 6% year-on-year to 9.86 million tons in 2021, while demand is likely to grow 3.3% over the same period, BGR-IMM Lilan Consulting Corp said on Wednesday. The projected refined copper production includes 7.18 million tons of primary smelter output, which is up 5% year-on-year amid capacity ramp-ups by Chifeng Jinjian and Nanguo Copper, BGR-IMM copper analyst Pan Hong said on Roskill's Copper 2021 webinar. Consumption of refined copper in China could have seen sharp year-on-year growth of 37% in the first quarter of 2021, while demand in the second quarter might ease slightly from a high base in the same period last year, Pan said.
Chinese steel and iron ore prices tumbled on Wednesday after the Shanghai Futures Exchange vowed to look into abnormal transactions, piling on the government's earlier attempts to temper commodity inflation through warnings. Shanghai construction steel rebar ended daytime trading 6% lower at 4,667 yuan, $729.79, a ton, after earlier touching 4,661 yuan, its lowest since March 24. Hot-rolled coil shed 5.4% to 5,017 yuan a ton, after earlier hitting a 2-month low of 5,011 yuan. We will now look at the top news in the agricultural sector. Indian sugar mills have started selling sugar without the support of government subsidies, which could lift exports by 14% from a year ago to a record 6.5 million tons in 2020-21, industry officials told Reuters on Wednesday. The exports will help the world's second biggest sugar producer to lower stockpiles and support local prices, which, at odds with the global market, have been under pressure from oversupply at home. They could also cap a rally in benchmark prices in New York and London, which jumped to four-year highs earlier this year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.